Hey everyone, Oracle reported fiscal year 2024 third quarter earnings results that sent the stock price up more than double digits. So in this video, I'll review Oracle's latest earnings results. I'll also update my recommendation for Oracle stock. Coming into the quarter, I did have Oracle stock rated as a buy, so you're going to want to tune in to see if I'm changing that recommendation. So without further ado, let's take a look at these excellent results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Oracle reported earnings per share of 85 cents, which was up 16% to $1.41 if you look at non-GAAP earnings per share. Total revenue was up by 7% to 13.3 billion, and total remaining performance obligations jumped by 29% to 80 billion. Out of those three numbers, the most impressive is the RPO number, which jumped 29%. Remember, remaining performance obligations are contracts that Oracle has signed with customers where it's going to deliver a service. Once it delivers that service, the RPO will turn into revenue. The company cannot recognize RPO as revenue until it performs that obligation. So if it signs a 4-year contract worth several $billion, it doesn't recognize that immediately as revenue. It recognizes it as revenue incrementally as it serves that 4-year contract. So that's why RPO is so important, because it eventually turns into revenue. And so RPO growing by 29% suggests that revenue growth could accelerate going forward. And that's precisely what management said in their comments, which I'm going to share with you right now. So over the last 12 months, operating cash flow was 18.2 billion and free cash flow was 12.3 billion. The company is doing a phenomenal job turning these sales into cash flow. And the core of this is large new cloud infrastructure contracts signed in the third quarter drove Oracle's total remaining performance obligations up over 29%. Moreover, they expect to continue receiving large contracts reserving cloud infrastructure capacity because the demand for our Generation 2 AI infrastructure substantially exceeds supply. Substantially exceeds supply. The words that every investor loves to hear, that demand is way more than supply, and that's going to drive continued sales, increasing prices, and increasing profitability. And of course, artificial intelligence is the magic word in 2024 that sends stock prices higher as soon as companies start talking about it. Because of this phenomenon, you have now another company stating that demand substantially exceeds supply as it relates to artificial intelligence. You can add Oracle to the list that now includes NVIDIA, Oracle, Supermicro Computer, and there are others that say we have so much demand, we can hardly fulfill it. We don't have enough supply to fill all the demand here from AI, increasing AI capability investments. And so this is great news for Oracle. You can understand why the stock price was up so much following these earnings results. Not only were the actual quarterly results strong, but the comments from management suggesting that things are going to be strong for a while, that really drove more enthusiasm for Oracle stock. They go on to say that their Gen 2 cloud infrastructure business will remain in a hyper growth phase, up 53% in the third quarter for the foreseeable future. This is great news for Oracle stock investors. Boy, these are great words. Not only are they going to be in growth phase, but management saying they're going to be in the hyper growth phase for the foreseeable future. So not just next quarter, but foreseeable future is at least 2 quarters or more, right? If it was just the next quarter, management usually says we have 1 more quarter of strong demand ahead of us. But when they say foreseeable future, that means at least 2 quarters and perhaps more, right? That's typically what I get when management says foreseeable future. So this is, again, more good news coming out of Oracle from their latest results, and it matches with the overall market sentiment as it relates to artificial intelligence. Investments to implement AI capabilities are increasing industry-wide. Companies are finding money to invest in AI, and they're taking money out of other areas so that they have money to invest in their AI capabilities. That's where their focus is. That's where companies want to invest. That's where companies are really rushing to get their capabilities up and running. They're not being price sensitive. They're not being cautious in terms of AI. They're being aggressive. And here's another data point suggesting that is the case. So now that we've looked at Oracle's excellent quarterly performance and the excellent prospects going forward, let's look at their valuation. So according to their forward price to earnings ratio, Oracle is trading at a forward PE of 20, which is just about as expensive this stock has been in the last 3 or so years. I have here the chart going all the way back to early 2021, and you can see at the current valuation of 20, it's only been at this price or higher at one point before in the last 3 years. So you're buying Oracle stock at the absolute peak valuation right now in its last 3 years. But at the same time, Oracle's prospects for the next year or two have never been as strong going back the last 3 years. So looking forward, Oracle's prospects are stronger than they've ever been going back this time period. So yes, you're paying this premium valuation, this peak valuation for Oracle stock, but you're also getting it at a time when its prospects are supremely excellent. You heard what management had to say. You saw the results, increases in revenue, in profit, in cash flow, and management saying that this is likely to continue for the foreseeable futures. You saw remaining performance obligations soaring by 30% and management saying that demand far exceeds supply. So all of those factors lead me to reiterate my recommendation for Oracle stock. I'm keeping Oracle stock rated as a buy. Coming into the quarter, I had it rated as a buy. Now the stock price has jumped. The valuation has increased. It's become more pricey, but at the same time, you're getting a lot more for your investment in Oracle. So you're getting more value for your investment in Oracle stock, despite the fact that the price increased. You're also getting a company that has better earnings and profit expectations going forward. So for all those reasons, I will reiterate that I think Oracle stock is a buy right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.